Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, November 29th. We're almost into this week here and into December. So this is what we got here. We got a couple economic news releases scheduled for today, including the weekly jobless claims. And last week, I had about 416,000 people applying for unemployment. Again, that was a lot of those are being last 2 weeks were being blamed on Hurricane Sandy on the East Coast there. This week, they're kind of projecting about 390,000 people applying for unemployment, and we had not quite a forecast, but pretty close to 393,000. So a little bit of reduction in the amount of people applying for unemployment. Now, typically, because in this area we usually get a lot of people going taking temporary positions for retail stores because they usually kind of gear up for the holiday sales and stuff. So sometimes lower down in this period from like Thanksgiving till around Christmas time, and then you'll see kind of January. A lot of times you'll see unemployment. A lot of those people go back on unemployment around January. So be cautious with the unemployment numbers or these employment numbers for the next month or so, just due to the seasonality of these things. And we also have the GDP for the third quarter. We usually have three revisions. The initial one for the third quarter was at 2%, and we figured it'd go up to about 2.8% because the initial one, the government doesn't have all the information, so they put their estimates in there, which are kind of estimated low. So they're figuring with the higher forecast, a little higher forecast would be a 2.8. So it's close to forecast, but the actual one came in at 2.7, and then we'll have another final revision next month. Now, again, be cautious with these two because they are a lot of times way off as well. For example, with the last one, it was like for the second quarter, we were like way up, like around 1.7%, and it dropped down like 1.2. So, pretty big difference from the second revision to the third revision, the last one we even had. So, be even a little cautious with this one, in my opinion. So, I don't think it'll be too bad like this time around, but for third quarter, as we did have, with the sales and everything going on with back to school and such going on. So we probably have a little bit of business there, but fourth quarter is not expected to be too great, even with the Black Fridays, as we kind of experienced last year. And then the last item here, we had the pending home sales from October. So back in September, we had about 0.4% growth, which is obviously very nice. We're still seeing some sales with the pending home sales, and we had a bigger increase in October for up to 5.2%. So a nice overall sales. The housing market still showing some growth there, which is kind of helping us along here with obviously with the GDP and everything. And now we'll just jump over to the headline news. All right. Headline news: the stock market's up a little bit, but it's real light trading. The Dow has kind of been back and forth, a little bit negative and positive territory, and a lot of it is the stock market's being felt. A little bit of what we had, this technicals there, but we also have a little bit of optimism being felt. Some investors are feeling that maybe they'll come to resolve with the fiscal cliff solution, having a solution, and even if it's a short-term solution, something's better than nothing before end of the year. So they're feeling a little bit better about. At least they're hopeful, but we'll kind of wait and see. We'll jump over to the bond market, see where things are at. My graph's a little bit off today, so I'm showing you where we've been at today. Yes, so we closed at 105.03. So we declined quite a bit. We had a drop in the market, so rates worsened yesterday. And we started off today at 105.3. We were down, even as far as down 104.97. And then we've been up as far as 105.06. So right now we're about 3 basis points higher than where we left off yesterday. So we're kind of about the same pricing as where we left off yesterday. As I mentioned, we had a worsening in the day yesterday as well. All right, so interest rates are a little bit worse than where we started off yesterday, or about the same as where we left off yesterday. But from the time when we did this video, it's a little bit worse than where we left off because we're up much higher. All right, folks, thanks for stopping by. I hope you guys have a wonderful day. I will see you guys tomorrow. And, if you guys like to see these on a daily basis, just stop by our Mike's Daily Market Report.com, and you can subscribe in the upper right-hand corner, and these will be emailed to you on a daily basis. Have a great day.